Broadcasting from our studios in beautiful Vancouver, Canada, this is Hashtag Finance, Westcoast Edition, presented to you by the CSE, the Exchange for Entrepreneurs.
Hi, my name's Anna Serin, and I'm here today, the CSE podcast, Hashtag Finance, Westcoast Edition. Today I'm joined by Brian Fowler. Thank you for joining me, Brian.
Thank you.
And you are with Northstar Gold Corporation, and you are one of the newest members of the CSE family.
That's correct.
You just listed with us via IPO in January, didn't you?
That's correct.
So why don't you tell us a little bit about the company?
Sure, certainly. Northstar Gold Corp, prior to getting our listing, it's a private company for about 11 years. Company's been focused on gold exploration in the Kirkland Lake region of northeastern Ontario. It's a very prolific gold district. During that time, the company raised about $7 million on a private basis, and the proceeds from that went to acquiring our 100% owned flagship property, the Miller Gold property, which is 18 kilometers southeast of Macassa and the Kirkland Lake town and district itself. We also have 100% interest in two other properties. One's a gold property called the Bryce, about 30 kilometers to the south, and we have a copper, cobalt, nickel property, about another 40 kilometers south. So we're focused in that part of the world. During that time, we've put $2 million into our Miller Gold property, and we're very excited about going public. So we undertook going public last November, and it was a 6-month process by IPO, and we were very happy to have closed it on December 31st.
It's a hard process, right?
It was. It took, it was a concerted effort. We had some great support.
Hopefully not due to the CSE, of course.
No, you guys are awesome. It's all good. It's just, it was just a difficult time. And when we first got out of the gate, we were in July and August, so you're trying to raise money for any deal that time of year wasn't the greatest. But, we got traction, and we finally, we eventually got it over the line. We raised, $3 million at 30 cents. We started trading. Our ticker is NSG. On January 2nd, and so we're cashed up, and we're about to embark on a $1.1 million drill program on our Miller Gold property.
That's really exciting. And I think one thing that's really neat is when we see these private companies who have invested privately and taken the project to a certain place before they look at going to the capital markets to do future raises. It's nice to see, as opposed to the initial, right? The risk factor just goes up that much more for the investor. So why don't you tell us a little bit about Kirkland Lake?
Great. I guess if you're in gold exploration or in gold business, Kirkland Lake's a great address to have. It's a historic mining camp. It's produced over 25 million ounces of gold from 7 mines this past century. And one of the main mines is still active, Kirkland Lake Gold's Macassa South Mine Complex, which has been in the news lately with some fairly new and substantial deep discoveries of high-grade gold mineralization. Our property, as I mentioned, is 18 kilometers southeast of that Kirkland Gold's Macassa property, and it shares a number of very important geological similarities with the Kirkland camp. And I'll try to keep this simple, but most of these deposits and all the main deposits in the Kirkland camp are situated along they're called breaks. They're big fault structures that go very, very deep into the Earth's crust. And they are very critical in focusing and channeling gold-rich fluids up from the mantle and up from through the crust, and localizing the gold in deposits at or near those breaks. So in the Kirkland, that break is called the Larder Cadillac break in Kirkland Lake. We have a similar break on our property. It's called the Catherine Fault, and it does join up with the Kirkland Larder break. So these
and is it an actual fault
they're natural long-lived structures that are there. So we've got a similar style of plumbing, and we also have a similar style of mineralization. Now, the mineralization at Kirkland is quite unique in that it's high-grade gold, but it also has tellurides, which is a submetallic mineral that can carry a lot of gold in itself, and it's quite unique. And the gold mineralization on the Miller property is identical. It's the same style. It carries We have tellurides. We have very high grade gold mineralization in quartz veins in volcanics. In addition to that, the rock types are the same age. Geologists can date this stuff, but we also know that the gold mineralization is the same age as at Kirkland Camp. So the inference is that we've got the same plumbing, we've got the same age of mineralization, we've got the same style of mineralization. So we think we're tapping the same source of gold. And you got 25 million ounces coming out of the Kirkland Camp, and our project has a historic estimate and an exploration target that I can get into, similar style of mineralization, but this is all near surface, so there's been no real systematic exploration below 300 meters on the property.
Wow.
So it presents a pretty exceptional opportunity.
An opportunity, absolutely.
Yeah.
What is a historical estimate?
Okay, right now we have 43-101. This is all post-Brex. A lot of issues. So the security, the regulators, and everyone thought they would try to tighten things up and make it better and safer environment for investors, and provide a strict rules and guidelines for mining companies to report estimates or resources, mineral resources.
Which is the 43-101?
Which is the 43-101. Yeah. So prior to that, the work that was done prior to that, a lot of it was great work, if not better than today, in my opinion. But it didn't meet a lot of these classifications or this classification. So as such, the regulators are very strict in that you can only call this like a historic estimate.
Okay.
And so that just tells the investor and the audience that, okay, this estimate did not meet the work requirements and technical requirements that are in place today.
So when you read a press release and it says that, that's what that means.
That's exactly what that means.
So the work was done at some point before the 43-101 came into being.
Exactly.
So it's historical. That's interesting. I didn't even know that, actually. That's really interesting.
So it is a very concern, and companies have to be very careful, and the regulators keep a very close eye on that, making sure that mining companies, exploration companies report accurately. So, as I mentioned, the Miller property is an old mining camp in its own right. There's 11 shallow shafts on the property. There was an old mine called the Miller Independence Mine that was that was active in the early 1900s on the property. Their production is really questionable. We don't really know. And then like most of these mining stories, they were working away until the mill burned down in the late 30s, and that was the end of it. In the late 80s, a company came in and assembled some of the ground and drilled 37 vertical holes in the area where the Miller Independence Mine was, and they established this historic estimate, which is 270,000 ounces of 11.5 grams per ton gold. So it's fairly decent grade, but this estimate is not based upon normal 43-101 criteria, and we get that and we understand that. But we're very...
It's still data to pay attention to.
Absolutely.
Yeah.
And so part of our program and what we're going to do this year is to go in and drill some more holes within portions of that estimate to confirm the historic drilling and historic assays. We don't have all the data. We have some of it. We have drilled a couple holes around there previously. We acquired the property in 2012. We did some drilling in 2014 and 2015. So we got a good feeling about what's there. We also did a fair bit of surface stripping and we even did a bulk sample program in 2016. So
what's surface stripping?
It's where you go in and you just you use either an excavator or that's probably the best way to
scratch at the surface.
You do, and you remove the overburden because most places in Ontario there's a lot of drift cover with dirt that's left from the glaciers. But we're quite fortunate on our property that veneer is not very thick.
Right.
So stripping is quite effective, and the company has done a fair bit of that over the years, and that work has shown us a number of things, probably the most important being that there's a lot of vertical gold-bearing structures on the property that, if you're drilling vertical holes, you don't have a hope of figuring out what's
randomly finding it.
Exactly.
Yeah.
So you're either drilling right down it, or else you're right beside it and you don't even know about it. So you really need to kind of angle your holes and come at it with a much better, a better plan.
Yeah.
And you can do what's called oriented core, where when you're drilling a hole, you can actually position the core so that when the geologist looks at it in the box, you can relate all the structures that you see back to real real coordinates, so you can really understand what's going on. And then when you map the property, a geologist will map a property, and that's done primarily by mapping the surface exposures or the trenches or whatever you do. And then you're just building a three-dimensional model of the geology and the controls and mineralization on the property. And that's what drilling, and that's what stripping, that's what trenching, mapping, that's where you're going. And then
so those samples give you an idea of what you think is under there and how it's formed under the ground.
It gives you an idea of the controls.
Right.
And yes. And then this, in terms of the geology on the property, it's called a big hydrothermal. It's a big altered zone. There's been a tremendous amount of deformation, a long period of deformation, squeezing of the rocks, intrusions of crystalline stocks coming up to volcanoes that were probably up top, but someday that have since been eroded. And the gold mineralization has been coming up. And so all this rock has been worked and squeezed and juiced up and it fractures, and then gold will deposit in voids or in pressure shadows, or there's certain areas that geologists know where mineralization and gold deposits are most likely to occur.
Right.
So we try to understand
based on
that.
different moves underneath the earth, you can estimate that this would be created here. So a gold deposit could be created.
The more you understand the geometry and the timing of mineralization and the nature of it, the better chance you have at finding where it all dumped out. And the beauty of these types of deposits, like Kirkland Lake, or they're called Archean, these are very, very old deposits, over 2.5 billion years old.
Wow.
These rocks are very, very old. But the beauty of these types of deposits is that typically the gold deposits they're very continuous. In some cases, much more continuous at depth than they are along strike, in most cases probably. So once you're in one and you can see it, then you can keep going. And this style of geology and these types of deposits can generally translate into multi-million ounce deposits. And it's the same kind of thing you see in a Dome, Red Lake, in the Kirkland camp. So it's a great, you got the right things going, and then you have a much better chance of finding something big. You look at Kirkland at the Macassa, that's been mining. They've been mining since 1930, and they're still finding high grade.
Wow.
They had one drill hole, I believe it was 2,700 grams per ton gold over 1.8 meters. That's phenomenal.
Wow.
That's 2.7 kilos of gold over nearly 2 meters. Everyone else is talking grams per ton. So you can get tremendous grades, and a big part of that grade boost is the occurrence of tellurides, because tellurides can carry a lot of gold as well. So it's quite unique.
This comes up a lot when I talk to people in the mining sector. Grams per ton. If I'm brand new to the investment space, what does grams per ton mean?
Well, prior to grams per ton, there was ounces per ton, and that's how it was just the troy ounces. It's just the measure of a concentration of gold in a volume of rock.
Okay.
So in the old days, it was ounces per short ton, and the short ton is 2,000 pounds. And the ounces are troy ounces, so it's based on a 24-ounce system.
Okay.
I think I got that right. And then with the imperial system, now it just translates to grams per ton. So there is a conversion of the troy ounces to grams, and then the short tons to metric tons, and it's 2.2 or 2.2 short.
So is that essentially taking a ton of rock out of the ground and the amount of mineralization found within it? Is it just that comparison?
Yeah, that's what the drilling exploration, that's what you do. Your end game is when you're exploring and you're drilling, is that you're trying to define a volume of rock with a grade. You're trying to estimate the gold grade as best as possible, and that only comes with a very solid understanding of the geology, adequate drilling, and very precise analyses. And there's the procedures, the way to do it. You got to make sure you're doing it right. and then you can take it to the next. And the geological model is probably the most important thing. And I'm not just saying that because I'm a geologist, but it is. If you don't understand the geology that controls the mineralization, you're whistling in the dark and you don't know what's going on.
Yeah.
And there are numbers of examples out there in the past, mining companies that went into feasibility or mine building without a solid geological model, and they blew up. Yeah, and it's it
I won't ask you to name names.
I won't, because I don't want to get sued. But
tell me off the air.
but it happens. So you really need to understand the geology, and that's what the geologists do. And then once you've got that kind of figured out, then you bring in a geostatistician, or these are people that specialize and they apply statistics to the distribution of gold within the constraints of your geological model. Basically, geologists will develop a geological model, and you try to define three-dimensional domains that contain the gold, or based on geological, visual, physical characteristics that the geologists have measured while they've been logging the rock and looking at it.
Yeah.
So the geostatistician, if he knows what he's doing, incorporates that, honors that on a statistical basis, and will apply a number of data exploratory data analysis, and look at and do all kinds of neat and wonderful things on the statistical side. And then they come up with ultimately, and then they apply estimation processes. There's one called kriging, which is probably the most common. And so it's a series of algorithms and logarithms and I used to know this stuff. But anyway, it is a science.
Yeah.
And then they apply all of that towards coming up with an estimate, a grade estimate for your deposit.
Wow.
And then that goes back and forth with the geologists, because geologists are not, they won't like it right away, because they think it's shortcut, it's underestimating what's there.
Right. Their baby, right?
Yeah. And you want it right. And because you haven't even got to the engineers yet, which are the guys that basically blow up your project, because as soon as they put economic, and I'm being facetious, but when you get to the point where you got, you got to start putting economic constraints on actually extracting the mineral, whatever it is you're looking at. And then it's very important. So the geologist, the geostatistician have to sign off on it. Say, okay, we get this. The geostatistician can support the premises and the observations that the geologist makes by looking at it on a statistical basis. And if they can do that, then you've got agreement, and that gives you confidence that, okay, this is probably right, or as close to right as you're going to get.
And that's what an estimate is. It's all of those parties coming together.
That's the estimate. And then once you got that, then you go to the engineer, and then he tries to right away he'll tell you it's got to be bigger and it's got to have more grade. What are you wasting my time? But that's that's the process, and then you work with that, and then it goes back and forth, and it's a very long process. And I worked with Placidome for 13 years.
Capital intensive process.
It's capital, absolutely. And I haven't even gotten there yet. But to build mines is phenomenal.
So once you get to that place, and let's say you decide to go ahead with a full-blown drill program, is it quite often what they estimated, or is it quite often not at all what we anticipated?
Well, when you get to that point where I'm just describing, that's all been drilled. It's all drilled off.
Okay.
You're ready to mine.
You're ready to go.
So what you're doing is just trying to get the engineer's job is to put a mine plan around that and demonstrate profitability, and then away you go.
And profitability is how much it costs to extract the ore body versus how much.
How big do you want to make it? How much money it's going to cost? How long it's going to take to get payback? Yeah. All these variables, and these mines are expensive and they need to be financed. And typically, they've got, it could be anywhere from a year to 3 or 4 years of where they're not making any money.
Infrastructure being built.
You're just building the thing and getting it going, and then you're generating revenue, but you're not. You're just servicing your debt to make it to that point. So it's very, very difficult, and people need to really understand. They don't understand how difficult it is to actually make a mine. It's something that on numerous occasions it takes a number of times, number of attempts. One company will come in, do what they can, try to make it work. doesn't work, can't raise any more money because the market thinks it's not there.
Yeah.
They lose it, they sell it, and somebody else comes in, starts it up again, carries on, and this goes on and on and on and on.
Yeah.
And then at some point, something will happen. There'll be a new geological idea, or somebody will drill in a different direction or something. All of a sudden you find something else.
New data comes to light.
Or you new high grade, whatever, and it's like, holy smokes, we got something else here. And then you focus on that, and then you supplement your previous work. And it's like, wow, we think we can make this work. So that happens all the time. So, but it's an extremely long.
Well, you guys are
process.
Dedicated. That is a long process.
Well, it is. It is. Yeah. But it works, and and companies that take shortcuts generally blow up.
Yeah.
It's a process. It takes a lot of time and money, and smart people, smart geologists, smart geostatisticians, smart engineers. You need access to capital. You need the right kind of people that could raise the capital and make sure that at the end of the day, you've got a profitable mining operation.
Well, and I think that really speaks volumes to when everyone says when you're looking at investments is the management team. So I think that's really where that speaks to it. Having the right people involved and running the program is really going to make or break the opportunity, because like you said, there could be something there, but they failed on their execution. They walk away from it and a new team has to come in and take it from there. Brian, listen, I can't thank you enough for joining us today. I learned a ton. I bet our listeners learned a ton. Maybe is there anything you want to finish off on as far as what's happening in 2020 for the company? Anything for us to watch out for?
Yeah, absolutely. Like I said, we have a near surface estimate. It's high grade. I didn't mention there's a mine just beside us that was in production in the late 40s, and that produced 70,000 ounces at 11.2 grams per ton. The depth extent of that deposit extends onto our property at depth. So we've got, like I said, the Northstar checks all the boxes, and that's why I joined this group. Like you said, we got a property. It's 100% owned. It's got all the earmarks of something big and Kirkland style mineralization. It's only been explored on a shallow basis. We're fully permitted. We're cashed up. We're going to be drilling. The drilling's going to be starting here the 23rd of February, which is very soon.
Wow.
And we expect, our initial drilling is going to be fairly shallow, so we expect a quick turnaround and results. So we will be having a very steady news flow going forward from, mid to late March onward.
Yeah.
So that's important to investors. The company.
That's kind of nice. You'll be going into PDAC with the drilling started.
That's right.
Yeah. That's nice stuff to talk about when you're on that floor.
It is. Yeah. People. Absolutely. So that's good. And the company share structure is very tight. We got 35 million shares out, and we plan to keep our share structure tight. We're very cognizant of that. We've had a lot of very loyal shareholders that have been in this deal for over 10 years.
Yeah.
And a lot of new shareholders, which have been great. So we definitely want to make it worth their while. And you touched on people, and that's one of the big draws for me with this company as well. And we've got a very excellent group of accomplished mining, exploration, development, finance, investment banking professionals that we've done it all. So we've got a great team, and that was a big draw for me. And a particular one that really stands out for me is a special advisor, Mike Sutton. He's hands-on with our company, and Mike won Prospect of the Year award at PDAC in 2006 for the discovery of the Macassa South Mine Complex.
Wow, that's fantastic.
He knows the beast, and he knows what we have, and he's front and center with us, so it's good. So
that's
it checks all the boxes. And
what's really neat, what I like about this is one of the beauties of the capital markets in the mining sector is if you go and do your drill program and you don't find the results or it doesn't go as expected, shareholders get an opportunity to participate in future ventures, which is the RTO as we know it today. And I think it's really neat that you guys did a direct listing, that the share structure is built out. It's just your share structure. It's your shareholders. And I think that shows that there's definitely potential upside for the existing shareholders and new shareholders coming in, because you really are kind of at ground zero as opposed to a company that might be on its 10th or 11th project, and had to go through, maybe a potential rollback or further dilution because they've had to do a bunch of capital raises. So definitely we'll be watching you guys as you move forward, and I wish you guys all the best. And again, welcome to the CSC family. We're excited to have you guys with us.
It's great to be here.
My name's Anna Serin. Thanks so much for joining us today for the West Coast edition of #Finance.